Hello everyone, welcome to the Daily News Decoded initiative of nextias. This is Varun. Today we will discuss 5 important articles from two newspapers, The Hindu and Indian Express. The first article is about RBI Cuts Key Rate. This we will cover in our mains decoded section. Then 4 other articles which we will cover in our explained section for prelims. First is NCSK, that is National Commission for Safai Karamcharis. Then private member bill. Beside it, we will also discuss new income tax bill, and then we will discuss Skill India program. So now without wasting time, let us discuss our first article, that is RBI cuts key rate. So the article is, after tax relief in budget, RBI cuts key rate first in 5 years to spur growth. Also in the Hindu it has been covered as growth push, RBI cuts rate by 0.25%. What is the backdrop of this article? Because this rate cut has been in last 5 years first time, that's why it is very important. Also, it is relevant for our paper in GS3 Indian Economy in mains. Now, let us see a PYQ to understand better that how this topic can be covered in examination. What do you understand by repo rate and reverse repo rate? What are the implications in raising these rates? Means 2010, this question already has been asked by UPSC. Now, what we will cover in this topic, let us understand. First, we will discuss what is news, then why rate cuts needed, then we will look into the impact which this rate cut will create, and then various challenges which this rate cut will put. And in last, we will also see what is the way forward or path ahead. So, starting, why in the news? So, RBI has cut repo rate by 25 basis point to 6.25%. So earlier it was 6.5%. As we can see in the diagram, it was 6.5%, but it has been reduced to 6.25%. Also in this diagram, we can see that since 2022 there has been no rate cut, only the rate has increased. Even last rate cut was in 2020 during the COVID period. This is first rate cut in nearly 5 years. The purpose or the aim is to boost economic growth by making borrowing cheaper. So let us understand what is the reason and why this rate cut needed. So first reason is economic slowdown was happening, and in current fiscal year the projection for GDP growth is 6.4% from 8.2% in FY24. So last year 8.2% of economic growth was being there, and it has been reduced to 6.4%. So government want to counter this slowdown of economic growth, and that's why this has been done. Repo rate cut is also done to make borrowing cheaper for individual and businesses, and which ultimately leads to spending and investment that stimulates economic growth. So ultimate objective is by cutting the interest rate, borrowing will be much cheaper, and then people will try to borrow and you utilize that fund for investment, and hence investment will lead to economic growth. Beside it, the inflation targeting which is given to RBI as a mandate is also come down. Inflation estimate for FY 2024 to 25 has been kept unchanged at 4.8% by RBI. So RBI is saying that this inflation rate 4.8% will be for this current year, and that's why they have done the cutting in the rate. Now let us also try to understand some of the very important keywords which has been coming up in this news, and this will also help us in our prelims segment. So first is MPC. MPC means Monetary Policy Committee. This committee determines policy interest rate in India and to achieve the inflation target. This is a statutory body. It is under RBI Act has amended, and it comes under the RBI Act. Then what is repo rate? Rate at which RBI lends money to the commercial bank. So the rate at which commercial bank take loan or money from the RBI in event of any shortfall of funds. Then what is reverse repo rate? So this is the rate at which RBI borrows from commercial bank. This is just opposite of what is repo rate. This is usually less than repo rate. You have to focus. Then expansionary and contractionary policy. So while expansionary policy boosts economic growth, increases demand and reduces unemployment, whereas the contractionary policy controls inflation. When inflation is very high, RBI follows contractionary policy to control inflation, reduce excess demand and stabilize the economy. There are two other keywords like MCLR, that is marginal cost of funds based lending rate. This is a minimum interest rate below which banks cannot lend. So this is a floor which has been set up. Now there is another term call money market. So call money market is a market for uncollateralized lending and borrowing of funds. Here there is no collateral being put. This market is predominantly overnight. So it is not long term, it is only for overnight period and is open for participation only to scheduled commercial banks and the primary dealers. Everyone cannot participate in call money market. So this question can be asked directly, what is call money market, what is MCLR, what is repo rate, what is reverse repo rate. So you can attempt this question in your prelims examination. Now let us understand what is the impact of rate cut. So there are predominantly two major impact. So first is interest rate and loans. Their cost will reduce. Okay, there will be reduction in the borrowing cost. So what will happen due to that? EMIs on home and vehicle loans will decrease. When EMI will decrease, then more money will be in the hands of consumer. They can spend more. Then MCLR linked loans may also see lower rates. Those which is being set up by the banks as a ground or as a base for lending, that rate will also reduce and that will again encourage the consumer to take more loan and invest in the economy so that economic growth get a boost. It will also promote some cheaper borrowing for individual and businesses both. Not only individual section but business will also find relatively cheaper loans when there is a repo rate cut. It will provide relief to home, vehicle and consumer loan borrowers and which ultimately spur into more economic activity, more economic growth. Then there is increased investment and consumption. So what happens when lower interest rates are there? It encourages higher spending. Business can invest more due to cheaper credit and boost economic activity and job creation. When economy is being boosted through investment, what happens? New economic activity is being created. For that, more employment is being created, generated, and then ultimately it leads to more spending, more consumption, and this becomes a vicious cycle. Now let us see, there will be some challenges also regarding this rate cut. What happens? Inflation may rise due to higher demand. Now when there is a rate cut, we are seeing that there will be more money in the hands of consumer, and when there is more money and limited goods, so more money is chasing limited goods, which will ultimately lead to more inflation. Then there is lower returns on savings, which may discourage saving. So what will happen? Interest rate or MCLR is being reduced, as we have seen in the previous slide. So what will happen? Banks will be giving less interest rate, and now due to this there will be discouragement among the person who are going to save the money in banks, and that will create the problem of credit inflow in the banks itself. Beside it, no one can predict global uncertainties like trade policy, rupee depreciation. These are always a risk. So even there is a rate cut, that cannot guarantee economic growth if the global uncertainties are there, like what happened during COVID-19. Also, let us understand what is the way forward for this problem. So we should balance our fiscal and monetary policy. Like our fiscal policy is also in expansionary mode. Government has announced tax cut. Similarly, fiscal policy has been in sync with monetary policy, and monetary policy has also announced interest rate cut in the form of repo rate cut. Then there should be a balanced approach while tackling inflation, and not only inflation should be focused, but also economic growth should be also taken into consideration, so that there should be a sustainable development. So let us see a practice question which you can use for practice. Post this solution in our comment section. Analyze the impact of a repo rate cut on different stakeholders. including borrowers, savers, and the banking sector. How can the RBI balance growth and inflation through monetary policy? So for this, you can write an introduction like just mention by a current affair based introduction that RBI has recently cut repo rate by 0.25%, and then in body you can mention about impact on different stakeholders. First part will be impact on different stakeholders, and then second part we can discuss about the stakeholders will be borrower, saver, and banking sector. Then how RBI can balance growth and inflation through monetary policy. Then we can, because it is a 15 marker question, we can mention some challenges also, and in conclusion we can mention a way forward, that what a way forward should RBI follow to cover this topic. So this is our humble request, write the answer and post in our comment section. Let us discuss one of the article which already has been covered by us in one of our Daily News Decoded initiative episode. The article is about first Guillain-Barré syndrome case. It has been covered by us on 28 Jan 2025. You can refer that video and understand the concept. Now we will discuss first article of our explained section for prelims examination. The first article is about National Commission for Safai Karamchari. The article has come in the backdrop of Union Cabinet has approved a 3-year extension of National Commission for Safai Karamcharis till March 31, 2028. Now, the article says that National Commission for Safai Karamcharis get 3-year extension. So, what is the relevance of this topic for our examination? It comes under the polity section of non-constitutional bodies. In prelims examination, it can be asked. So, let us see what is about this article. So, the current tenure was to set in on March 31st, 2025 of National Safai Karamchari Commission. But because if the tenure has ended and the commission does not have its validity, so it would have been a problem. That's why it was given extension. Now there will be a financial cost also for this extension. It will be about 51 crore. The financial cost of extension is 51 crore as per the article. Let us see what is the background of National Commission for Safai Karamchari. We can also say it as a NCSK. So it was established as a statutory body in 1994 under a act. The act was called as National Commission for Safai Karamchari Act 1993. This act was enacted by Parliament to provide statutory backing. But in 2004, what happened? This act lapsed, and due to lapse of the act, this statutory body becomes non-statutory body because it does not have any legal backing. And this body also comes under Ministry of Social Justice and Empowerment. This question itself can be asked in the prelims examination. Its scope was also expanded after the enactment of Prohibition of Employment as Manual Scavengers and their Rehabilitation Act 2013. So this act was also brought up by Parliament to prevent manual scavenging, and this body NCSK has got some backing, but it not get legal backing. Okay. So let us move ahead and discuss what is the mandate of this commission. So there is basic 3 mandate. First is about awareness, second is about policy recommendations, third is overall monitoring. For awareness, that it promotes awareness regarding rights, entitlements, welfare programs for Safai Karamcharis. Beside it, it also recommends various policies and programs to government for elimination of inequalities in status, facilities and opportunities for Safai Karamchari because they face a lot of discrimination. Beside it, also it do overall monitoring in the implementation of program and laws which already has been in the legal arena. These has been monitored by NCSK, particularly which are related to Safai Karamchari. Beside it, there are some challenges also to NCSK, Like first, it is non-statutory status. So whenever a body is non-statutory, there is lack of legal backing, and that's what reduces its authority and enforcement power, because it does not have legal backing. So the bodies which are legal or the government departments may sometime bypass. Then persisting manual scavenging is always happening despite legal ban, and even the act which prohibits manual scavenging, there is a still issue of manual scavenging in our society. Then there is also issue of awareness. So awareness regarding welfare of Safai Karamchari, their rights and entitlements is still not that much. These are some challenges. Let us have a practice question on this topic so that you should be much better prepared. With reference to NCSK, that is National Commission for Safai Karamchari, consider the following statement. It was established as a statutory body under the National Commission for Safai Karamcharis Act 1993. It continues to function as a statutory body under the Ministry of Social Justice and Empowerment. The scope of NCSK expanded after the enactment of the Prohibition of Employment as Manual Scavengers and their Rehabilitation Act 2013. So our humble request to all of you, kindly attempt this question and mark your response in our comment section. Let us discuss one of important article which already has been covered by us in one of our previous Daily News Decoded initiative episode. The article is about High Court verdict on custody parole. So we have covered parole on 29th January 2025. You can refer the video and understand the concept. Now our next topic is private members bill. So article has come regarding private member bill being introduced on POXO Act coaching centers. So there has been 2 to 3 private members bill recently introduced. We will discuss those. The backdrop is recently Parliament is ongoing and these bills has been introduced. Relevance of this article is in our Indian polity and constitution for claims purpose. Now let us see what is the first bill. So first private member bill says that Coaching Institutes Accountability and Regulation Bill 2024. It has been introduced by one of the member of parliament from NCP, Fauzia Khan. The bill has proposed to set up a coaching institute regulatory authority under the central government to regulate coaching institutes. Okay. Beside it, Union Minister of Education has opposed the bill and said that education is in concurrent list and regulations should be handled by states and union territories, not by central government. Government has initially opposed but later agreed to discuss the bill. Then there is another bill, private member bill. It is regarding POXO amendment bill. So it is again introduced by Fauzia Khan and the proposal was to introduce victim-centric reforms in the POXO Act. Some key provisions of this bill is structured compensation procedures to prevent delays. Beside it, mandatory training for stakeholders, including educational institutions and child care personnel. Then there is also a bill regarding constitutional amendment bill has been proposed for minimum parliamentary sitting. So in our country, there is no provision that how much minimum number of days parliament should sit. For that, TMC MP, that is Trinamool Congress MP, Derek O'Brien has introduced this bill and proposed that a minimum of 100 days of parliament sitting should be there for annual. Also, RJD MP Manoj Kumar Jha has introduced similar type of bill which proposed 120 days of sitting per year. Then what is the objective of this bill? It will ensure how this bill will, by increasing the number of sittings or by announcing minimum number of sitting days, it will ensure government accountability. Then it will also allows MP in advance to plan their parliamentary agenda. So they will know the complete schedule of the year and it will help them. It also enhances productivity and efficiency. Beside it, there are some additional features in MP Manoj Jha's bill So we can see that short session with no government business should be there also. Some short session can be conducted by government to discuss very important national issues. Then there is a proposal to make opposition business committee to decide opposition matter which can be taken up in the sessions. And then there is a compensation mechanism should also be there, which can be unutilized hours due to disruption will be adjusted by extending sessions. So what is private member bill? So it is introduced by any MP who is not a minister. What is its purpose? To address public interest issues that may not be covered by government. What is its procedure? So notice must be given 1 month in advance. Then it can only be introduced on Fridays. On other days it cannot be introduced, and House must approve before further discussion. Now let us see one of the prelims question which has already came in 2017 with reference to Parliament of India. Consider the following statement. A private member bill is a bill presented by a member of parliament who is not elected but only nominated by the President of India. Recently, a private member bill has been passed in the Parliament of India for the first time in its history. Which of the following statement above is are correct? So kindly mark your option in our comment section and your viewers will review. Let us discuss one of the important article which has come in today's newspaper, Democratic Republic Congo conflict. This article already has been covered by us in one of our previous video on 3rd Feb 2025. Just watch the video and understand the concept. Now we will discuss another article which has come in today's newspaper in the explained section for prelims purpose. The article is about new income tax bill gets approval from Union Cabinet. The backdrop of this article is that the new income tax bill gets approval from the Union Cabinet and its relevance is in the paper of Indian economy. Now let us see what is the background of this article. So direct tax code was being proposed by UPA government in August 2009, but it has lapsed due to dissolution of 15th Lok Sabha. In 2018, what has happened? A task force was created to prepare a draft new direct tax law, which submitted its report again in 2019, and then in October 2024, the Income Tax Department has announced that formation of internal committee to review the Income Tax Act, which is prevailing in the Indian society, and invited public inputs and suggestions on 4 key important areas. First was simplification of language, second was litigation reduction, third was compliance reduction, and fourth was obsolete provision. So for these comments were being invited, and then our Honorable Finance Minister in Union Budget 2025 to 26 on Feb 1 announced that a new income tax legislation will be introduced in the ongoing budget session. So this was the context in which this new legislation for Income Tax Act has come. Now what is this new income tax bill? So it will bring simplicity. From time to time government is emphasizing that we have to simplify. Simplicity to the taxpayer, 50% less in tax and clearer compared to the previous one. So they have tried to make it much more clearer, much reduce the length of the act, and thereby simple to understand for taxpayers and tax administration, leading to tax certainty and reduce litigation. So ultimately the objective is to simplify, to make it more easy to understand taxpayer, and when these things will happen, there will be also the impact will be that less number of litigation which goes into the court will reduce down. Now let us see what can be the question on this topic be framed. With reference to India's decision to levy an equalization tax of 6% on online advertisement services offered by non-resident entities, which of the following statement is or are correct? This question already has been asked by UPSC. So the statement is it is introduced as a part of the Income Tax Act. Non-resident entities that offer advertisement services in India can claim a tax credit in their home country under the double taxation avoidance agreement. So mark the correct option in our comment section. Your peers will review. Let us see one of the article which already has been covered by us in one of our previous episode of Daily News Decoded initiative. The article is about MGNREGS, and this article has been covered by us on 3rd of Feb 2025. Kindly watch the video and understand the concept. Now we will discuss another article from our explained section. The article is about Skill India program. So the backdrop of the article is the Union government has decided to restructure its skilling initiatives. What they have done? They have combined 3 of them into the Skill India program. What is the relevance of this particular article? So it comes under government schemes and policies for our prelims examination. So let us see what this Skill India program is. So this is a central sector scheme. First, it is central sector scheme, not centrally sponsored scheme. And cabinet has approved 8800 crore rupees for 3-year period ending in 2025 to 26. It will be run by Ministry of Skill Development and Entrepreneurship. The 3 schemes which are merged in Skill India program are: first, Pradhan Mantri Kausal Vikas Yojana 4.0. Second is Pradhan Mantri National Apprenticeship Promotion Scheme. Third is Jan Shikshan Sansthan Scheme. And then there is also some data that under Skill India program about 2.27 crore beneficiaries has benefited till date. After that, let us see what this Skill India program has aimed. So it will provide, particularly after the restructuring, what will be the objective of this scheme. So it will provide structured skill development, on the job training, then community based learning will also be provided. Besides it has a particular objective. Objective is that to ensure both urban and rural population, including marginalized community, have access to high quality vocational education. Now let us see the schemes which have been merged. Let us have a brief background about them also. So Pradhan Mantri Kausal Vikas Yojana was launched in 2015 and this scheme is implemented from FY 2022 to 23. Which scheme? Pradhan Mantri Kausal Vikas Yojana 4.0. It provided targeted industry relevant skills, enabling learners to upskill, reskill and enhance employability in high demand jobs. So this scheme has provided these specific goals, specific targets. Also, it has some other benefits like short-term training including special projects, reskilling and upskilling through recognition of prior learning (RPL), with its target beneficiary being 15 to 59 years of age. So this question itself can be framed that recognition of prior learning was recognized under Pradhan Mantri Kausal Vikas Yojana or not. What was the age bracket in which this scheme was working, like 15 to 59 years. So age bracket is also important. You have to keep this in mind. Next, our scheme is Pradhan Mantri National Apprenticeship Promotion Scheme, that is PMNAPS. Its objective was to facilitate the transition from education to employment through industry specific training. So what happens in our society, mostly we get formal education but there is a lack or dearth of training regarding our skills. So this wanted to fill that gap, bridge that gap. It also provided some financial support. Central government covers 25% of the stipend up to rupees 1500 per month via DBT. When someone is under training, they will get stipend and that will be maximum rupees 1500 per month, which will be supported by central government. There is also eligibility criteria again regarding age 14 to 35 years. So this can be tweaked, like in Pradhan Mantri Kausal Vikas Yojana it is 15 to 59 years, whereas in Pradhan Mantri National Apprenticeship Promotion Scheme it is 14 to 35 years. Now our next and last scheme which has been clubbed is JSS scheme, that is Jan Shikshan Sansthan scheme. Its objective was to promote community centric skilling initiative and it will help into accessible and inclusive vocational training. Its target group was particularly women, rural youth and economically disadvantaged groups. Then here also again we have age eligibility which is open to individuals between age 15 to 45 years. So we have Pradhan Mantri Kausal Vikas Yojana, we have Pradhan Mantri NAPS and then JSS scheme, and all three have a different age criteria, like JSS 15 to 45, Pradhan Mantri Kausal Vikas Yojana 15 to 59 years and then PM NAPS 14 to 35 years. So this can be asked. Now let us see a practice question. With reference to Skill India program, consider the following statement. It is a central sector scheme under Ministry of Skill Development and Entrepreneurship. It merges PMKVY 4.0, PMNAPS, GSS scheme. Then under PMNAPS, the government provides 25% of the stipend up to rupees 1500 per month. So kindly attempt this question and mark your response in our comment section. Let us see one of the article which has come in today's newspaper about Tamil Nadu governor withholding assent to bill. This article also has been covered by us on 7th Feb 2025 in a very detailed manner. Kindly watch the video.